Welcome to Drill Down Earnings. We have quarterly results out from Applovin, that Wall Street darling, that game player darling. This is the business story behind one stock on a move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research, where we focus on the 50 most important companies in technology, and Applovin is certainly one of those. The stock price is just jaw-dropping here. So Q4 earnings from Applovin were better than good. They were fantastic. They crushed the estimates on Wall Street, $1.73 in earnings and $1.37 billion in revenues in the 13 weeks in the quarter. This business has just grown by leaps and bounds since we had the CEO on our show, I don't know, probably 2 years ago. It was an interesting interview, but who knew this company was in for this kind of run? Just fantastic growth. 73% year-over-year growth in revenues. Just amazing. Advertising revenues, I should say. They used to call the advertising business software. So in my model, I still call it software. My charts, I call it software. Top line revenues up 44%, but this software, now we're calling it advertising revenue business, is growing fantastically. Let's look a little bit deeper beyond those headline numbers. So when you think about Applovin and what this company does, fundamentally, they are capturing the billions, yes, I said billions, spent on advertising in mobile games. Estimates are that there's $15 billion. My friend Michael Pachter at Wedbush puts a $15 billion price tag on annual spending in games on your phones. It's an amazing number, and this company is rapidly capturing lots of that. And they're doing so profitably. 44% margins from a company that used to lose money on every sale is now pulling in 44% margins, a little bit off last quarter, but still just fantastic for this very profitable business. Most of the revenue, as I mentioned, 73% of the revenue is from what they used to call software and are now calling their software platform, they're now calling advertising. In-app purchases have been good, 18% of revenues, and in-app advertising not doing great, only 9%. But advertising writ large, which they're calling software platform revenues, again, just doing great. And while the growth rate isn't the 200% that we saw 2 years ago, it's still growing really nicely. And as this software platform grows, there's kind of two ways to look at it. Yes, it's growing and supporting the entire thing. It also shows you how the mix is changing so dramatically from what this business was in 2022 to what it is here in 2025, where the software platform was less than 20% of the business, and now it's closing in on 70% of the business. And it's kind of masking weak growth in the in-app advertising. So how did the market react when these numbers came out? Well, there's certainly a short interest in this thing, and people kind of betting maybe the good news won't continue, the good times won't continue to roll. Well, they were wrong. Stocks up 15% in after-hours trading after a 708% increase in the last year. So the market loves what they're seeing out of this company, the big turnaround we've seen after the troubles they had a few years ago. Here's what CEO Adam Foroughi had to say about how this was always the plan. Sure it was, Adam, okay. But when they put this platform together, what they really expected to happen over time and why that's happening right now.
When we put the platform together, we really strategically made a choice to go after D2C commerce. But what we knew is that if the tech works there, it's going to work on everything. And so sort of privately and quietly, as we've gotten onboarding from clients in other categories across a wide range of categories, we've been seeing that the models are working there. And what I was announcing just a couple minutes ago is that we're seeing success across any category that comes onto the platform, which gives us a lot of confidence that as we go through the year, we release more tools and really go into more of a self-service and open state. We're going to be in a position to go after the very, very large set of advertisers that are in the 10 million plus range of the world over the next coming quarters, years, and decade plus. This is something that we aspire to do, and we're going to take our time on, because I do want to caveat it with an important point that ties back to our culture. We're spending quite a lot of time trying to build tools to automate the entire system so that we're not looking at a massive revenue opportunity in front of us and suggesting that we have to go hire people to go after it. We're going to continue to stay diligent and lean, and we're going to use tools and AI and automation to deliver the same type of solution and success for advertisers that come on board in the future, but make sure they come on board into a platform that hasn't changed anything from the cultural values that have gotten us to this point.
So they say they're in the right place. They're talking constantly about cutting costs, about reducing headcount, even as the business is getting so much better and so much more profitable, as well as so much bigger. But what's your big takeaway here? What's your drill down earnings takeaway, and the one number that tells you a whole lot? Well, fourth quarter revenues from Applovin were just fantastic. Really strong growth from this company. And while top line growth was 44%, the sales of the capture of all kinds of advertising around the world of mobile gaming, a $15 billion business, these guys saw 73% growth in their advertising revenue for this business. And it has resulted in a fantastic move in the stock, 700% in the last year, 15% in after-hours trading. But the drill down earnings bite, the one number that tells you a whole lot, is their software platform, which they now lump into advertising, saw 73% year-over-year growth. That's just fantastic. That's a number to remember about Applovin. All right, thanks for checking out Drill Down Earnings. Check out our full takes on earnings on YouTube and, of course, on all the socials. Thanks for checking us out.